Earlier this morning, the Fed Chairman Jerome Powell just announced that everybody in the United States, including all households and businesses, will be feeling pain. In this video, I'm going to tell you what he just signaled about what they're going to be doing to fight inflation, what the markets are going to look like, what some of the predictions of the markets are, and what you need to be doing over the next 1 to 2 years, and why this is actually great news for you. I'm going to explain in this video. Hey everyone, my name is Randy. Welcome back to the Late Night Grind. Right now on this channel, we are covering cryptocurrency news, investment markets, and personal finance. So if any or all these topics interest you, make sure you hit that subscribe button, join the Late Night Grind community. So if you smash the thumbs up button and watch this video all the way to the end, I'd really appreciate it. All right, guys, let's jump into it. So Jerome Powell just announced that the Fed is going to be doing everything in their power to fight inflation, and that includes throwing the United States economy and pretty much every business and personal finance under the bus in order to do so. This announcement was called extremely hawkish, which means it was a very tough message for him to deliver in the face of all the economic uncertainties and the poor economic backdrop that we have right now. So what they did was basically said inflation is the enemy. It is the number one enemy that we need to beat because short-term pain is going to be better than much longer-term greater pain. And what that is signaling is more rate hikes. So we've already had back-to-back 75 basis point rate hikes. And what Wall Street and other investors were hoping for was some sort of signal that they were going to be doing that to the end of the year, and in 2023 reversing course and maybe even having rate cuts next year. Well, it doesn't look like that's going to be happening anytime soon. So we're going to have to wait until next month's FOMC meeting to hear what they're actually talking about in terms of the number of rate hikes, what their actual number is for interest rate that they're actually targeting. Right now, we are at about 2.25% to 2.5%, which is actually considered neutral. The problem is it's been at zero for so long. It seems like it's been raised high. So nonetheless, they're going to be continuing to raise rates into next year. And according to pretty much everything you see on the news, the mainstream media, YouTube, social media, everything is about to collapse. Everything is about to crash. All the impending stock market crash predictions are all over the place. Now, there is good reason for that. You have jobs numbers that were seen as extremely soft, if not just made up altogether. Number two, you have back-to-back rate hikes. Number three, you have a housing market that just finished off one of the biggest housing price spikes that this country has ever seen, and it is now cooling off, and many are saying a collapse is about to happen. There's some housing numbers that actually back that up, that over the next year or two, there could be extreme pain for people who just bought houses at the peak of pricing. So not only do the rate hikes affect many other things, of course, it affects mortgage rates as well. Right now, they're at about 6%, but if they continue to raise rates 2, 3, even 4 times into next year, even if they slow it down at the beginning of next year, you could be looking at mortgage rates at 8% plus. Now, are we going to be seeing 14, 15% interest rates like back in the 1980s? I highly doubt it. But nonetheless, the Fed has signals that they are willing to throw everybody some pain in order to get this inflation out of control, in order for it not to become hyperinflation. Now, why is this great news for you? Well, because you're paying attention to this stuff. You're either paying attention because you're an investor, you're a trader, you're interested in personal finance, or you're just a viewer of this channel. This is great news because now you can kind of see what's going to be coming along in the next couple of years. I've been saying for about the past year now that starting next year is going to be one of the best opportunities to get into real estate flipping, buying extremely cheap houses that are on fire sale. In fact, you're probably going to be seeing a lot more foreclosures go up for sale. And so if you're starting into real estate, it's actually one of the best times to be doing so. Not only that, if we look at the rest of the investment markets, there's some people calling for major crashes of up to 50% of whatever the levels are now. Now, I don't think something like the Dow Jones is going to drop 50%, but the S&P, from a technical perspective, could drop as much as 50%. In fact, there are several doom and gloom analysis that I've been watching that say, yes, the S&P could drop sub $2,000, which is about 50% from where it's at, which would be crazy. And if you're going to see that, you're definitely going to see a sub $10,000 Bitcoin, maybe even $7,000. So why is this all good news? Well, it's not great news if you're heavily invested in that stuff already. However, it just means you have to hold for the long term. But why is this great news? Well, because now you know that in the next year or 2 or 3, especially if you follow the housing market cycles, the Bitcoin pricing cycle, and the rest of the inflationary and rate hike cycles, you can actually see now that over the next 1 to 2 years, if you're positioned properly, you will be able to buy extremely undervalued stocks, extremely undervalued cryptocurrencies, as well as extremely undervalued real estate. This is how billionaires have literally made their money for 100 years, is buying when there is extreme pain and extreme blood in the streets, and cashing out when everybody else is FOMOing in because things are going sky high. So I wanted to introduce to you something called personal capital, which this is actually free to join and free to use, professional grade, free to use net worth calculators, retirement calculators, retirement projections, your net worth tracking, all of your assets and liabilities, and a whole bunch of other amazing tools. There's actually a link down in the description below. You can go and check out, sign up completely for free, use these professional grade tools, and make sure that you're tracking your own personal finances so that you can be in the best position to scrape up some of these amazing deals after the crash happens. Now, of course, you're going to have to pay attention to this all along the way. You can't just assume that in a year or two everything is going to bottom, because things are always fluid. But let me know in the comments section down below what you think is actually going to happen to the market, not just the indexes, but the housing market as well, the cryptocurrency market, and even the dollar versus other countries' fiat dollars. Right now, it looks like the DXY, the dollar, is of course spiking, which it always does when the Fed gives a hawkish signal, such as Jerome Powell just did. And so as I just checked the chart behind me, which is a Bitcoin chart, it looks like the Dow is down big, but the S&P, as well as some of the crypto markets, they were up earlier, and of course, they tanked when Jerome Powell made his statements, but it didn't tank nearly as low as it could have. So I'm going to continue to watch this throughout the rest of the day, because in my opinion, yes, the markets could tank, but investors that are hearing this news today, they're probably thinking the same thing that I am, in that this is actually good news, because now they have a better idea of what is going to happen. Yes, it could cause a lot of pain for households and businesses for the next 1 to 2 years until the Fed thinks they have inflation under control, as they're right now trying to get that inflationary number down to 2%, which is, of course, their ongoing target. So let me know in the comment section if you think they're actually going to hit that target and how long you think it'll take. Several analysts have said this could take anywhere from 12 to 18 months. Some others have said, no, this could be a 3 to 4 year period of fighting inflation. Now that would be some long-term struggle. Once again, check out the link to Personal Capital down below. Like I said, it's free to join and use all of those tools. And I want to thank you so much for watching this video all the way to the end, for smashing that thumbs up button. And as always, I'll see you guys on the next video.